In level 3, there are 6 subjects to study, but there are 5 exams because one of the exam is like added with the other. So like the final exam, which is called synoptic exam, it covers two of the units, and then some knowledge from all the units.
Okay.
Yeah. So yes, there are 6 subjects, but there are 5 exams. So what are the subjects in that? Um, Let me introduce you to the subjects. So just a second, I'll share my screen and will show you the subjects. So let me share my screen with you. So AAT level 3, this is also called Advanced Diploma in Accounting level 3, and it has got subjects like advanced bookkeeping. In this, it will be advancement of the bookkeeping practices from level 2. Level 2 is up to trial balance stage, where you know about the day books, ledgers, like double entry bookkeeping system, what are the debit and credit rules, and then making a trial balance.
Yeah.
After this, advanced bookkeeping will be about preparation of final accounts, and in this we'll learn the practice that the trial balance which we prepare initially, that is called initial trial balance. So in this we will learn like finalization of the trial balance, and then drafting the accounts, drafting the final accounts.
Yeah. Okay.
Then the second unit is final accounts preparation. These two are basically integrated units. One supplement the other. Earlier it used to be one topic only, but now AAT has divided into two parts so that exam is made simpler. So some topics are examined in this and the rest in this. So more or less this can be said that this is one topic, but there are two exams for this. Third exam is about management accounting. So, yeah, so third topic is about management accounting, costing. In this, you will learn about the uh, techniques used by the cost accountant, like the job costing, batch costing, process costing, more important budgeting, variance analysis, uh, and then drafting of reports for short-term decisions, and also drafting of reports for long-term decisions. So
Okay.
like the accounting portion, advanced bookkeeping and final accounts, this is like mandatory. Every business must do the preparation of final accounts because this is government requires that everyone has to prepare it. But management accounting is kind of optional, but still necessary. Every business do this as well. There is no statutory management accounting required for small businesses, but final accounts, as you know, is compulsory statutory. So, so we'll be learning this third unit, management accounting, costing. And the fourth unit, quite practical, indirect tax. This is about VAT accounting.
Okay.
And the this is a indirect tax is a fourth unit, and fifth unit is about ethics for accountants. So ethics for accountant is a general topic for accountant, but I generally say that this is like holy book for accountants.
Mm-hmm.
So the accountant must know about it, that how to deal with the situation in practical life, how
Yeah.
they can safeguard their job, because you have, as an accountant, you have very confidential information. So
Right.
how to deal with them, when to provide this information, whom to provide this, and like there are so many situations where there are job risks. So how to deal with them? It is all about that. It's very practical and very good. So this also will be covering in this. And the another topic is the spreadsheet for account. Spreadsheet, this is kind of advanced Excel. So this Excel is quite useful. In level 2, we teach our students about the accounting software. Mostly Sage is taught.
Yeah.
Um, and as you are working in accounting, you must be using some accounting software. So this spreadsheet is another software accountant must learn, because everything, all analysis cannot be performed by the softwares we use. Like say software does provide us a lot of information to make analysis. Lot of times we use Sage. Oh, sorry, software for spreadsheet
Okay.
accounting, spreadsheets. So therefore, it is very important, and we will learn how the advanced bookkeeping, final cost preparation, and management accounting costing are dealt in through the spreadsheet system. And there will be an exam for this as well. So generally, we tell our level 3 students to practice Excel from very beginning of the course, because each exam in AET is like time bound. You have exams for 2 hours or 2.5 hours for each subject, and if you do not complete, then like the time finishes and exam is submitted halfway through itself. So therefore, like spreadsheet need to be practiced so that you perform better in the exam. So as you will be going through the studies, so we will say that you must practice those activities in the Excel as well. And another exam is about the advanced diploma synoptic. This is an exam which covers these two units, ethics as well as spreadsheet accounting.
Okay.
But as I said, spreadsheet, this itself will cover all other units like the management accounting costing, final accounts preparation, and advanced bookkeeping. Well, the good thing is that indirect tax is not covered, like not included in this exam of for spreadsheet. Indirect tax is a standalone exam. Once you take the exam, that's over. So, but all other three units that will all again further be examined in spreadsheet accounting, or basically in synoptic. So you'll have 5 exams. One is the synoptic exam, When another is indirect tax, management accounting, final accounts, and advanced bookkeeping. These exams will be there.
Okay.
So we will cover each unit for like 4 to 6 weeks, and there will be a week for practice, and then you will be left for taking the exam. Exams will be done at the Nova College Center itself, or you can take exam at any other center as well. So
Where is the college? Where would that be? Where is the college?
Nova College has a center in Edgware, Queensbury,
Okay.
and W9.
Oh, all right.
Yeah. There is another center at Hounslow as well.
So that's where I'll take the exam.
Hounslow, yeah, where you can take exam in any of these two centers. But if you both are far from you, then you can take exam at any of the centers. College can send you a list where exam centers are there, or it can be just Googled as well. You Google, you can find out AAT assessment centers, and there are many in London and all over UK. Right. So this is about your units which we'll be covering throughout 7 months. Now, how we will cover, what will be the method of covering these units is through the online lecture. So we refer the Nova College tutorial notes, and also we refer the books. So you might have received a link to buy books, and also to log into the tutorial of Noah College.
No, I haven't. I haven't received anything.
Generally, it is sent in the welcome email. If it is not, then maybe I'll let college know. They will send the links again. So the books we use are of Osborne Publisher. Can you see the screen? So you can see this is Osborne Books
Yeah, I can see the
Publisher.
screen.
Yeah, so Osborne Books Publisher. So you get the discounted books from here. When you log in, you may need to write the college name, so you can put Nova College, and from there you can get the books. This is AAT. This is a website of Osborne Books, and this is the link. Everything is sent to you in the welcome email when you first registered on the website of the Nova College. They might have sent you an email. If not, maybe college may be sending again. So on this.
But they didn't send me any books. They haven't sent anything.
All right. Okay, I will note it down. So this is the link for buying the book. So Advanced Diploma in Accounting. You will see they have got a lot of tutorials, workbooks, as well as some other guides are there. But we will be referring, tutor will be referring to you the tutorial books. Workbooks are further like for more practice, but the workbooks are also included in our e-learning material, which is like Nova tutorial notes. For that also a link has been sent. As you said, you have not received because all is sent in one email itself. So no worries, an email will be sent to you again where you can log into that also. And if you have any questions, you can email or you can call the college. So if you do not have the books right now, no worries. I will show you online itself, and then later on you can have your own books, which you can buy from here. So if you have any more question about the subjects and others, that you can ask. Otherwise, I'll just go on. So for the first lesson, we generally check the knowledge of the students, from the your background. If you, because for studying advanced bookkeeping you must have very good knowledge of the um, bookkeeping, which is taught in level 2. So um, and how the system is followed, I would like to tell you that also. So before I go further, I will just show you the college tutorial notes which you can get online. So let me just find out. Just a second, I will be back with the screen. So let's have a recap of this. If you have knowledge of all that, this will be really good. Otherwise, you can ask questions.
I'm fine.
So we must have a very good idea about the double entry system.
What system?
Double entry for
Okay,
bookkeeping.
yeah.
Yeah. So we have a debit entry and credit entry. So
Debit the receiver, credit the receiver.
yeah, so debit entry is the account which gains value, records assets or expenses. So debit entry is mainly like gains value means increases. Where does it increase? It increases the assets or expense. So if there is any asset account or expense account, then and if it is increasing in the business, then we will do debit entry, right? So assets and expenses. I hope like if you can give me an example of assets. Assets are like the things which business owns. What business
So,
owns,
so
like
assets are like business computers, business laptops, phones,
yeah, yeah,
printer,
yeah,
all of that.
yeah. While expenses are the running expenses which are required to run the business, day-to-day running of the business. So like some people may confuse with, like, if the business is buying a car and also buying petrol,
Yeah,
right? So car is an
it's an
asset.
expense. As it's car is part of assets, right?
Yeah, while the petrol is an expense. Yeah. So although like a petrol is an expense, so how do we classify what is an asset or what is an expense? So we say asset are used for more than 1 year. So if we buy any things, we are going to use them for longer time is at least more than 1 year. So okay, assets. Now, expenses are rent, electricity, or there are so many other expenses. So it means what they're saying is debit as asset, and expense means if we are any asset is increasing in the business, we are going to debit it. If any expense is incurred, then we are debiting that. So asset is for accountant, asset is an account. Expense is also an account. Like so, so any asset coming into the account, it is increasing the balance of the account. Expense incurred, it is increasing the balance of expense account. Now, what is credit entry? Credit entry is the account which gives value or gains value, records a liability or an income. It means if a liability increases, then we credit that. When asset increases, we debit that, but when liability increases, we credit that.
So hold on. So when assets
Increase, when the
increase,
asset increase, like asset, how the asset will increase, then we will buy the asset.
yeah, if you buy like laptops or
Yeah. So then it will
printer
debit.
or anything, car or anything.
Yeah.
So when
Uh,
assets increase, then it means credit increases.
when asset increases, so suppose you bought a car on loan.
Yeah.
So now there is a liability as well as an asset, isn't it?
Okay.
So we'll be debiting asset because car is purchased, so we'll say car is debit. But loan account is credit because loan is increasing,
Yeah.
but car is increasing as well. So in this transaction, loan increased as well as car increased, asset increased as well as liability increased. Both are increased, right? If we buy a car and pay from bank account, so it means the car asset is increased, will be debit, but bank account is decreased because we paid from the bank.
Yes.
So therefore bank will be credit because bank is an asset and it is decreased.
Yes.
So that is a double entry. I just make a picture of
So,
this
so,
one.
so, so, so in this case,
Yeah.
the logic of the thing is liability
Yeah.
is an expense and asset is profit.
Liability is a liability. Liability is not an expense.
Okay.
So we have to classify the things into few categories. So we say that we have few elements like assets, liability, income, expense. Four things. These four are the major categories of the accounts. So something will be either asset or a liability or an income or an expense. So we have to classify into that. So if we draw an account, let me just do this. So if I draw an asset, sorry, it is if I draw an asset account, then this side is debit, this side is credit. Always any account has debit and credit like this only. But asset when is increasing, so increase comes on debit side. If the asset is decreasing, then that goes on the credit side. Like if you sell a car, then car will be credited.
Very good.
So asset account, asset as well as um, expense, they both are same. They both account work like same.
Okay.
So they both work like same. Asset, if the expense increase means like we have incurred an expense, we have paid rent. So we have rent account, right? So you know that when we pay rent, then we have two accounts to record. One is rent and another is bank, isn't it? So that is double entry. So we say that asset or expense account work like this. If it is increase, then it will be debit. If it is uh, in decrease, then it will be credit. Similarly, there is liability and income. Debit, credit. This is reverse of that. Liability, when increases, then it is credit. Or income increases, it is credited. While if it is decreasing, then it is debited. I thought like, okay, so this is how it works. So then so we were on our notes.
I can't see the note.
Yeah, I will. So this is like first point is debit credit. We need to understand that. Then we also need to know the double entry. That what is double entry means that simple account layout, assuming you sold goods on 22nd April for 1,450 pounds and paid for wages on 23rd April for 790 pounds. There are two transactions being happened. So one is that we sold the goods
Yeah.
and we also paid for wages. So do you agree with that? That we
Yes.
debit
Yes.
bank,
Yes. Yes.
debit bank for 1,450. So when we have debited bank, then can you tell me which account did we credit?
You debit bank with the
1,450. Yeah, we debited,
yeah.
but then because the double entry system, this is one transaction that we sold goods on 22nd April for 1,450. Yeah, so this is one transaction. For that, we have to do one debit, one credit.
Yeah.
So, are you aware of that? That bank account is debited. So, what
Yeah.
account is credit?
It wouldn't be capital account.
No, this will be sales account.
Oh, the sales. Yeah.
Yeah, sales account will be credited because later on we will show how much sale has been done. Okay, so like I generally say that the bookkeeper is like a story writer. They have to write what is happening, and at the end of the year, they tell that what all has happened into the business, how much sale has been done, how much payment have been done, like that. Because we have sold goods on for 1450. If I do not write that in sales, then how will I know that the sales has been done?
Has been done. Yeah.
Therefore, I need to credit into the sales. But now why I'm crediting sales? Because sale is one of them. What is one of them? Sale is either asset, expense, liability, or income. What is sales? Is it asset or expense or a liability or an income?
So, our term sale to be a liability.
No, sale is not a liability.
Okay, or our term it to be a credit account.
Sale is an income.
It's an income. Yeah.
Yeah, sale is an income. What is the income of a business? That is sale. If you're a rental property business, then rent is the income. If it is an accounting business, then accounting fee is the income.
It's
If
an
any
income.
other business, for them, sale is an income.
Okay.
So income is increasing. When we sold goods, then income increased. So therefore, we are crediting the income, right?
Yeah.
Uh, and what happened with the bank account when we made a sale? Then bank account increased. Bank was an
Mhm.
asset. Therefore, we debited the asset. We debited the bank account,
Yeah.
right? So that is what happened. So then, suppose we see other transaction. We paid wages. We paid wages. We said paid for wages for
That
790 pounds.
yeah, if you paid for wages, that'll be credit, right?
Credit to the bank account.
So you credit what?
Credited to the bank account.
Mm-hmm.
But debited where?
Um, and you debit it from the sales.
No, debited to the wages account because we paid wages now.
The wages account.
Okay. So because what is wage? If we see from here, um, wage is one of them. What is wage? Wage is an asset, expense, liability, or income. Wages for the business. Can you guess what is a wage? Wage is an expense
So, hold
of
on.
the business.
You credit you debit bank account for wages and you credit wages account.
Reverse. Because we paid wages, so bank account decreased.
Yeah.
So the bank was an asset. Bank was an asset, so it decreased. Therefore, we credited the bank.
Yeah.
It is also an expense. Wage is an expense.
Yeah. Yeah. Yes, I understand.
Then now expense for the business is increased. Wage account is showing an expense increase in the business.
Mhm.
So therefore, wages account was debit.
Well,
So this is like how there's only four things, not many. There are four things we need to find out. Is it an expense, asset, liability, or income? Is it increasing or decreasing? And this will define which account will be debit, which account will be credit. We have some short way of saying as well. What do you say?
is it the debit the receiver and credit the giver?
Yeah, that is one part of the entry. Have you heard about dead click? We also say this like dead click.
How do you spell that, please?
DEADCLIC.
B E A
AD
D
dead click.
T L I T
C.
C.
Yeah.
So
Can you
dead
see my screen?
I can't see your screen. I
Oh
can't.
God. Okay, sorry. So, I always share my screen. Sometimes if it is not, then just people can tell me.
Yeah, I
So,
can't.
this is dead click.
I still can't see your screen.
Okay, still not mine.
Okay.
So,
Yes,
here,
I can see your
dead
screen.
click, where,
Oh,
uh,
yeah, click.
yes, it's just
Okay.
simple, dead click. So, D is meant for debit, expense, assets, drawings. Drawings are what owner takes the money out. And here click is meant for credit, liability, I is meant for income, okay, here drawings, or we can say debtors, I think. C is for creditors. So some people say drawings, also it can be also called debtors.
Yeah.
Some students like learn like this.
So, hold on. So the last C is for
Is
creditors.
creditors, yeah. So liability income. The this and this are like same thing.
Okay.
Okay. Well, these are like basics, and we must know about the to do advanced bookkeeping. Okay. So now, if I go back on my notes, so here we are saying that how the double entry operates is with the um, with the like one account is debit, other is always credit. So here
Yeah.
we saw two transactions and we noticed why it was debited and why it was credited. So when we are doing computerized accounting, then automatically everything goes to the debit or credit, right? When you use the software, then what you would have done, suppose we sold goods for 1450 pounds, what we will do? We'll go to the bank and make payment for sale, right?
Yeah. Yes.
Yeah. So then you will see that when we do this, the software automatically puts this into the debit of the bank account and credit of the sales account.
Yeah.
Similarly, when we are paying wages, what we do, we go to the bank and just
Withdraw
make a
money.
payment of wages.
Yeah.
And with that, these two accounts are affected. Bank is credited, and wages is debited.
Debit.
So let's go further. So this has been explained again in this debits and credits. So liabilities, again the same thing. Liability, expenses, revenue means income, and their mention of drawings is there. Drawings is just like reverse of capital.
Debit.
Isn't it? Capital means when the owner is putting in the money. Drawings means when owner is taking out the money. So it is saying that Asset is also there. Asset is debit. What is debit? Debit is for increase and credit for decrease.
Yeah.
And why it says that initial entry debit means generally speaking, asset will have a debit balance only, while liabilities will have credit balance. If it is increasing, we will credit this. If it is decreasing, we'll debit that. This is what we learned in our notes earlier. We learned here that if it is asset, then increases debit. If it's a liability, then increases credit. So then expenses are there. Expenses are same as assets. You will see that generally asset will have debit balance. It will increase with the debit and decrease with the credit. This one, the third line. Then revenue. Revenue is income. Income works same as liability. See, credit, debits. When it is increasing, we credit this, and when decreasing, we debit this. Can you see that? Another thing is capital. Capital can be drawings or capital. Drawings means when owner takes off money. Capital when he puts in money. So drawings, and we start with capital. Capital also works like same as liability or income. So capital account has the same debit credit as of the liability. See how? If capital is increasing, we are crediting that. Like decrease is debit and increase is credit. What it means. And normally capital will have a credit balance because owners will be putting in money mostly. If he takes off money, then it is just the opposite. So if drawings increase means he is taking off more money. So that is why drawing account will increase.
Yeah.
So it will be debit. And if it is decreasing means he is like not taking money basically, or if is then it will be credit. So we need to learn these three. Well, the debt click.
Who?
In that, I can also call this instead of creditors. I can also call this more capital as well. So C can work for creditors or capital.
Okay.
So some people learn here D for drawing, some learn for debtors, and C, some people learn for creditors, some can learn for capital. So this is one of the summary of the debits and credits. But this is the very basic thing I've been teaching. I was expecting this, that level 3 students should have this knowledge. But if you do not have, then I may recommend you to attend some level 2 classes as well. Okay, just 1 second. I can see another student is here who wants to talk to us. Hello, Draklina, how are you doing? Hello, Bosnia, can you hear me?
Yeah, yes.
Great, nice to see you online. So, yeah, you were a little late, but hope you have not missed much. So, have you done level 2 accounting?
Yeah.
Oh, okay, so what I'm teaching is like might be very basic for you. You might be aware of this.
Yeah, I see.
Great. So we are just recapping this thing so that With level 3, there is no issue. All right.
All right.
So, okay. So you missed the induction part initially, but I will share the recording with you, and then you can see that as well.
Okay, sure.
So we are back to our notes. Now there is another transaction, financial transaction, that assume an electricity expense of £500 has been paid from bank. So what will happen? Like we paid electricity expense of 500 on 1st January, and assume this is paid from bank. This is what has been shown in this. So there is an increase in expense. Electricity is increased, like for the account purpose, we see, we will say that 500 pound has been, because like accounts are like boxes, electricity box, okay, in that what you are putting in, so that you know that later on how much is the balance in electricity account. So electricity account is an expense, therefore it is debit. Expense has increased. While when we make the payment, then bank balance will go down.
Yeah.
So therefore bank will be credited. Okay. So double entry ledger accounts, non-current assets. So are you aware of non-current assets and current assets? Non-current, so there are non-current assets as well as current assets. So current assets are like bank or debtors or stock, which basically keeps changing. The balance keeps changing frequently. And the office equipment, they are non-current assets. So when we buy an office equipment, this is £2,500. This is non-current assets. So there is an increase in asset office equipment. So we debit office equipment account, and with bank means two accounts are affected: office equipment and bank. So making it simple, I'm saying that we purchased office equipment of 2,500 and paid the money by bank. So Draglina, can you tell me what account will be debit, what will be credit? We purchased office equipment. We purchased office equipment of 2,500, okay, and paid by bank. So, so what we are saying? There is an increase in asset because we bought asset. So we debit office equipment with bank. Why it is saying we debit office equipment with bank means we write here like bank. This also results in decrease in asset account. So we credit bank with office equipment. Is it clear?
Yeah. Now, yes.
Another transaction is of assume a owner's drawing of 250, means like owner has taken out some money from the business bank account. So drawings. So first we work with bank. Bank will be credit because money going from the bank, so it is credit. Obviously, the other account will be debit. It is drawings. So we like the picture which I showed you. The picture which I showed you like this. This is very like when initially the bookkeeper accountant do not know what to do. Then this is the theory. But once like you are used to doing these transactions, then you know by heart that okay, I know this will be debit, this will be credit. Why I debited drawing? Drawing, like if owner has taken out money as drawings, it means drawings are debited, and bank is credit because bank is an asset, but this is decreasing. This is all for increase. This is all for increase. This picture is for increase. Increase of debt, increase of click. Right? So if they are increasing, then we debit them. If they are decreasing, then we will credit them. If asset decreasing, expense decreasing, or drawing decreasing, then we will credit them. All right. So this we need to practice. Then there is another transaction, loan. Assume a loan of £1,000. You took a loan from bank. So what will happen? Loan. There is an increase in liability. Loan. So we credit loan with £1,000. We credit loan with bank, like we write the details as bank, and in the bank account we write in the debit as loan, because when you take loan, the loan money is put into your bank account. We have two accounts open, one is loan account, one is bank account. The loan, it gets credit, in the bank it gets debit. For purchases, assume a cash purchase of raw material of 5,000 and 2,800. We just purchased some raw material. So what we are going to do? We have purchases account and bank account. When we say purchases, it is considered as an expense.
Expense, yeah.
So expense account has been debited with £5,000 and 2,800. Two times we made purchases. So two times money gone from the bank, and we credited the bank, right? Purchases on credit now. Suppose you purchase on credit without making payment. So what will happen? Assume a credit purchase of raw material from M Manufacturing. It is the creditor for £250. So there is an increase in expense. Purchases are considered as an expense. So expense increased, so we put 250 in the debit side, and in detail we put the name of the creditor. And in the manufacturing account, we put on the other side. So one account is debiting, one account is crediting. We need to practice this. Purchase payments, M Manufacturing, like assume a payment for credit purchase and raw material. We have made a payment to M Manufacturing from whom we purchased earlier. When we purchased, we put this account as credit. Now we are making payment to this person. So when we make payment, then the bank balance is going down. So we are crediting bank, and payment is going to M Manufacturing. This is our creditors account. Creditors account is a liability. So liability is going down because we are making payment to that guy. So now we don't have liability to pay him anymore. So we debited. So there are a lot of entries basically. Similarly, there is amount for cash sale. When we made sale, cash sale. So bank account is debiting and sales account is crediting. Sale is income, bank is asset. If we sold on credit, so there is sales account and the debtors account. So sales account is crediting and S stores account is debiting because it's a debtor. Debtor is an asset. So when there's so many transactions for you to just recap, purchases return. We bought from something from B. Lewis and now we are returning. So we have two accounts: purchases like the this person creditor and also the return account. I hope these entries are Reglina, do you know about these entries when we make purchase return? Then what? When we return, then whose account is debit, whose account is credit?
Will be increase the debit.
Yeah, return account. Return is like opposite of purchases, isn't it?
Yeah.
When we purchase, then we debit this. When we return, then we credit this. And in the B. Lewis account, we debit it. Just 1 second. So like today it was just a lot of debit credit. I'm just going to finish this debit credit and then going on the next thing. Just a second. Another person, Matthew, can also talk with us. Hello, Matthew. How are you doing? Hello, Matthew. Are you there? Hello, Matthew. Are you there?
Yes, I'm here.
Yeah. All right. So like this was a lot of debit credit. So we are going to finish debit credit and going on the next step. Okay, let's go on the next one. So well, there are a lot of other things in this. Before we go further, today was like mainly I wanted to tell you about the debit credits and also want to make sure that you know about these rules because these are the basic rules of debit credit. Okay, now I want to go back.
But sorry, can I ask a question?
Yeah.
You know the double entry, would it be part of the exams or something?
That is basically the base of full accounting, and lot of debit credit we teach in level 2, and then like a lot of practice we do with the you know debit credit. So yeah, it is one of the essential things that you must know, and we are going further as well. Yeah. If you like, we can, you can attend some level 2 sessions as well, just to understand more about it, because not only debit credits are, important to know, but also like the system of accounting, like what are the day books, what are the ledgers,
Mm-hmm.
and how the trial balance is constructed is quite like important to note because soon we'll be doing some entries for sale of assets, right? And then disposal of assets. There are quite a lot of entries which we have to do. These are called adjustments because in level 3 what we are learning are basically final adjustment entries only.
Only okay.
But these basic entries we must know beforehand. So level 3 is about, I'll be telling you like how to deal with the stock, which is lying at the end when we are doing final accounts preparation. Then we need the adjustment entries for stock, for accrual prepayments, for disposal of assets, right? These kind of adjustments. They are forming part of level 3. But level 2 is all about the day books and the double entry and also the basically day book to ledger, that thing. Um, well, like some basics I can tell you in the class itself, but if you there's no issues. If you have some time, then you can attend that as well. Anyway, we can discuss that later. Now, some more basics I want to go with you. Um, just a second.